The big one to watch out for. The RBI is going to be announcing its first bi-monthly policy review for FY15 tomorrow. And against the backdrop of easing retail and wholesale inflation, many seem to believe that the RBI will hold its fire this time around. Anirudh Ghosh joins us now with more details on what the street is expecting from the RBI. Anirudh?
Indeed, Aisha, that's what the street seems to be believing. And if you go by the poll that we've conducted across banks and treasury managers, it clearly does seem to show about 90% of the people expecting that there's going to be absolutely no change on the repo rate, which of course is the key policy rate at this point of time. Also, 100% expecting no change whatsoever on the CRR as well as on the SLR. If you look at a couple of nitty-gritties in the poll that we've conducted, a huge number of people, in fact about 90% of the people expecting that the rate cycle will turn only post the second half of 2014. So we have about 60% of the people saying that the rate cycle will turn only in the second half of 2014. Another 30% saying that the rate cycle will only turn in 2015. So clearly, not too much of a hope building up as far as a rate cut is concerned. But then, going forward, a lot of people are expecting that inflation is going to be the main focus of the RBI. Remember that they've made it amply clear that controlling the CPI is going to be top of the agenda. And of course, if you look at the expectations in terms of the CPI, not too many people are expecting CPI to go significantly below the 8% mark from here on. So clearly, people are expecting that the yields are going to be maintained around these levels. So of course, there aren't too many expectations of any kind of a change coming through. But then remember that Dr. Rajan has made it quite a habit of surprising the markets of late. Remember, in the past couple of policy statements, he's done almost opposite to what the general consensus has been as far as the expectations are concerned. So, as far as that is concerned, we really can't say which direction he's going to be taking. The guidance he takes also is going to be a key factor in determining how the markets are going to be reacting to the policy. Remember, there's a lot of uncertainty on the horizon, whether it's on the political situation at home or in terms of the geopolitical situation overseas. So clearly a lot of uncertainties, a lot of ponderables at this point of time. So going forward, it really remains to be seen what kind of a guidance and what kind of policy action the governor is going to finally take when the policy is announced tomorrow. Let's also take a look at what a number of top bankers had to say in terms of what they're expecting. Let's take a look at a bite belt put together in terms of the expectations of top bankers across the system.
RBI, as you know, wants inflation figure around 8%. So to that extent, I don't really immediately see any reason for them to cut rates. Come May, normally the vegetable prices increase, and if that happens again, you will see a spike going forward. So unless and until we get in figures for the next 2 months, it would be very difficult to predict any rate cycles.
I don't think a rate cut is at all on the cards. I think the rate pause is probably a reasonable expectation. In any case, I think the RBI has sort of said repeatedly that there is no trade-off between inflation management and growth, and that in the medium to long term, in fact, their focus on managing inflation is what is required to create an environment which is supportive to growth.
I feel it is a little premature to advocate for a softer interest rate now. On the 1st April monetary policy statement, I believe that status quo will be maintained. A lot will depend upon what the monsoon is going to be during the coming months.
The Reserve Bank is targeting inflation and they are seeking to bring inflation down, which is all to the good. Core inflation is still pretty sticky. On top of that, there have been some unseasonal rainfall this month, and my sense is that we need to wait and watch.